Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. How's it going, Ben?
No, I'm doing well. How are you today?
Doing pretty well, fighting some allergy stuff, so I might be sneezing periodically throughout, but nothing that's not normal for this time of year, I guess.
That's right. That's right. Summer grasses are growing and the pollen is high.
Oh yeah. Some grass fields starting to get a little bit thickness to them. Started to see some people out there brush hogging the road ditches too. So, it is that time of year. And speaking of that time of year too, we're recording today on Monday. We just had the planting progress report coming out. So, things just keep moving along, Ben.
Yeah, that's right. So we've had, some rain across the Corn Belt. Overall, May was actually, or has been so far, a decently dry month. However, we've had broad rains, with a good chunk of the country receiving at least some form of rain, an inch, across about 90%. Some broad rains, but not drought busting rains yet. And certainly that's been the case here in central Missouri. We could really use a good soaker for a full day here in parts of the country. So that planning progress continues. Probably the thing that caught my eye the most this week was that we saw that spring wheat planting number come in at 64%. That's been a number I've been watching just because I thought acreage in the northern plains might shift to corn and soybeans, or we might see elevated levels of prevent plant. And I still think that's the case. So, I wonder how much of that's actually planting that spring wheat crop versus, banding it, lowering that denominator and causing the percentage to go up.
So before we dive too deeply into things, let me give a snapshot of where we're sitting right now after the markets closed this Monday afternoon. Looking at July corn, it closed down 21 cents at 571. December 23 corn down 6 cents at 509. July soybeans were down 59 cents at 1341. November soybeans were down 59 cents at 1341. The July soybean oil was down 92 cents at 48.77, 48.77 cents per pound. July soybean meal was down $18.70 per short ton at 412.20. That July wheat crop we saw down 54 cents at $6.06. July wheat for the 2024 season down 42 cents at 661. And then July crude oil was up 88 cents a barrel at 72.05. So, Ben, a lot of light losses coming into this week on a relatively quiet week. What's been, I guess, your overall thoughts on the tone of the market coming into this week?
Yeah, and I'll just simply say that we did this at the close of Monday afternoon. Had we done this prior to the open on Monday, those losses would have been greater. We would have seen larger losses. In fact, even in that soybean market, we're up 30 cents, 30 plus cents on the day. As we moved into the weekend, a lot of, just kind of concern, I think, in the broader market that was weighing as we got through the weekend. We've seen, buyers kind of take advantage of some price breaks and get back into this market, which has helped prop up prices. But overall, a pretty bearish market across the board. It's going to take a pretty large spark or change in mentality, I think, to turn some of these price markets around. The one exception being the wheat complex. We saw some pretty large losses in wheat after last week's announcement that the grain corridor in Ukraine was going to get extended. That market remains tight and could get tighter as we move through the calendar year.
So, Ben, coming into this week, we saw U.S. gasoline demand drop about 4%, while U.S. ethanol production did increase about 6 million gallons. So some, I guess, split action there. What do you really see as we kind of enter this summer driving season when things warm up, or where we're seeing fuel demand sit?
Yeah, so where we sit today is corn used for ethanol is right around 3.5 billion bushels, a little over 3.5 billion bushels. That's down 200 million bushels year over year, or about 5%. What that ultimately means is we're running behind the pace needed to hit USDA's current target unless we see some stronger driving this summer. Again, it's that gasoline use that really starts to drive ethanol. use, pun intended there, by the way, I caught myself. That is going to have to continue to be strong as we move through the summer months to catch up in this ethanol portfolio. And as you and I've talked previously, just the expansion of summer taking, or, the expansion of that E15 over the summer months, it's going to add about 5 to 7 million bushels of corn. That's not close enough to the 40 million bushels we're behind at the moment. So we're going to need some more driving, maybe cheaper gas prices as we look ahead to the summer.
Well, looking at other areas where we, could see shifts in corn demand, looking at the global market, trade and exports there. We saw, some steady, I guess, export inspections on the week. We could talk about those here just a little bit, but soybeans were down. So where do you see, I guess, grains and oil seeds when we're looking at trade expectations?
Yeah, so this has been the area that has probably created the biggest bearish news in the market over the last, let's just say month. It could be last 5 to 6 weeks, but let's just go month. That's been the area where just repeated bearish news continues to come out. And I think as we look ahead, that's probably going to be a continued sentiment moving forward. A couple of reasons for that. One, Brazil's sitting on a massive soybean crop. They've largely filled all their available storage with that. They are exporting it because that has a larger value to traders than corn. However, there is nowhere to put the corn. Basis values within South America continue to be very weak, and that's allowing end users, primarily from China and other major consumers around the world, to buy cheaper, relatively cheaper product. As I've looked at some of these trade numbers, the one that's of most concern to me is Mexico. Mexico has been a very loyal partner for the United States, especially in the corn market. The fact that they're looking to South America and taking advantage of some of that cheap corn is of great concern. And I think that's, again, this trade scenario is going to linger with us. Soft export demand is going to linger with us for the next couple of months. And I think we'll even see some more sales cancellations here in the next couple of weeks.
Well, yeah, just going off of that, talking about the, competition in other areas really taken away from U.S. exports. We saw down corn exports, down wheat exports, and maybe something looking longer term that could impact the amount of grain exported. The Black Sea Trade Corridor that did get extended for another 60 days. So Ben, something that I feel like traders at this point were somewhat expecting, but what could this mean longer term for the market when we look at exports?
Yeah, and I want to clarify something you said just then. So the sales or the export inspections, the physical volume of inspections this week were actually relatively good. We saw week over week increases in inspections for corn, wheats, and grain sorghum. Wheat was extremely solid in terms of those physical quantities. What you were talking about in terms of down was those export sales volumes, where we saw net negative cancellations for grain, sorghum, corn, and wheat. So I just want to make kind of that distinction there that our volumes are actually had a pretty solid week, but without better sales, we're going to quickly run up of those commitments. Specifically the grain export corridor, I do think it was a significant step to go another 2 months, another 60 days to get that corridor open. Insurance premiums and the risk factor of ships going into the region and out still remains high. We've heard of delayed, inspections that are kind of bottlenecking that supply chain to get product out, but it's still moving. However, I think now what's starting to become a realization within the market is Ukraine might be out of old crop corn to export at the moment. And so, as we look ahead to maybe 2 months from now and we get into this picture where we're trying to figure out if the corridor is going to be expanded, it might not be necessarily, the current exports or the, as of that, so that'll take us to August. Let's just say 1st of August, Ukraine's not going to have any corn to export at that point either. And so now we're talking about, a future, extension even further, getting into some of those new crop corn exports that would be of interest. So now, again, it's starting to look at that new crop corn market for that grain corridor.
So bouncing back around, at what we were talking about earlier, when you're looking at the U.S. planting progress that we kind of teased when we opened up the show, really for corn and soybeans, we're a decent amount ahead of, I guess, the normal pace for this time of year. Some wheat, not quite as much, but looking at what that means for the market on a week by week basis, at what point does the impacts of weather kind of shift on how it impacts the market. We're looking at maybe continued dryness in the Western Corn Belt, how that could stunt maybe some early planted corn.
Yeah, so the weather we've largely talked about up to this point has been in relation to planting progress and just total amount of acres and how much prevent plant we'd see and if there was acreage shifts. Your question relates to when does weather start impacting yield? And I would say that that really becomes a factor in July, and primarily mid-July is when, well, for some of the early crop corn, it would be early July, but for July, that's probably when we're looking at the next weather premium kind of baking in. And as I remind folks, El Nino has been slow to develop here in the United States, but in previous years, when we've seen an El Nino slow to develop, late July, mid-July is really when we started seeing that increased precipitation. So I think it'll be dry through June. I that's kind of what we're starting to see is that it's going to be dry, but maybe some of those rains starting to fall right as we're getting into pollination for this corn crop.
Well, and it's obviously something that's difficult to project out because, it could change just over a couple of days when you're looking at that dryness. But it'll be interesting to see as dryness maybe continues into June and through June, how traders start to react, as we approach that July 1st date.
Yep.
Ben, and then as we look at spring wheat, it's still behind the pace, about 10% behind. What are you really seeing out there when you think about how farmers are trying to get caught up and what really that looks like moving forward?
Yeah, so I certainly teased this up at the beginning. I wonder how much planting of spring wheat is happening versus abandoning the expectations of wheat to switch to a different crop, corn, soybeans. Again, if you lower the expectations how much you're going to plant, that could cause that planting percentage to go up. So we might be seeing some of that. I do think they are planting, and we're seeing evidence of spring wheat planting, but I think in broader terms it just continues to tighten that wheat complex as we look ahead. I'll counter that and say that in the winter wheat crop here in the southern plains, there's places, including Missouri, where we are going to have a great wheat crop, a great winter wheat crop. Conditions have just been about perfect for producing wheat. And as a result, while we talk about the Western Corn Belt out in Kansas, Oklahoma, where conditions are terrible and they're not going to produce, Kansas at like 28 bushels to the acre. That's a terrible yield. We're going to be seeing better yields here in the eastern part of the Corn Belt in Missouri, Illinois, Southern Illinois, and Kentucky. But it's not enough to make up for the huge crop loss in Western Kansas and Oklahoma.
Well, I guess you kind of took the next question right out of me, talking about that crop condition rating. With it being so low, you don't imagine that the positives, like you said, in areas like Missouri would be able to drag the market upward with it too much.
Yeah, there's just not enough acres. Kansas is the wheat state for a reason. They produce a lot of winter wheat.
All right, Ben, looking ahead to the rest of the week, what should farmers and ranchers really be paying attention to?
Yeah, it's a pretty straightforward week. The one thing I'll point out is next Monday is Memorial Day. And it's kind of the unofficial kickoff to summer, but the market will be closed. And so we'll pick up on Tuesday with export inspections and crop progress a day later.
All right, Ben, it's always a pleasure having you on here. Viewers, listeners, if you'd like to learn more about us or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.